Well, folks, today's FS Club webinar is going to be interesting. When it really starts raining, you need more than an ARK. Or should I say, when it really starts raining, you need more than an ARKK. But we're going to understand what that's all about in a few moments when Scott Klimo, who's the CFA, who is the CFA, sorry, and is Vice President and Chief Investment Officer of Saturna Capital, gets going. Now, for a change, there's a bit of an interesting bit here in the weather. I am here in London, where it's hit 40 degrees or 104 degrees Fahrenheit for those of you in America. Scott, meanwhile, is over in the States, dialing not just from Seattle, but north of Seattle in beautiful Bellingham, Washington, enjoying an absolutely balmy climate. Normally this time of year, we'd expect that to be reversed, but such is the case. So Scott, you're gonna have to do a lot of the lifting today as I try and stay cool. Or maybe I need an ARK. Anyway. You'll know me, I'm Michael Mainelli. I'm one of the directors of Zen, and it really is a privilege to be able to introduce so many of these webinars, but I can only do so because of the tolerance, generosity, and wide-ranging interests of our sponsors, whom you see before you here. Our sponsors do let us range widely and freely, but Scott today is going to be talking about some very interesting things, in particular, why such a high separation, why such a wall between traditional finance and Islamic finance. And Scott's going to point out that actually that wall is looking higher than it really is or should be, and we'll cover that as we go forward. Now, the agenda for today is, as ever, fairly straightforward. My job is to get out of the way as quickly as possible, and then we're going to let Scott have 20 minutes to sort of set the scene and what he thinks, and then we're going to have 20 minutes of Q&A, and I'm counting on you out there to really get your thinking caps on. 3 quick items. 1, yes, this is recorded. 2, Scott's slides are available. And 3, how do I answer questions? Well, you feed them into the Q&A facility here in GoToWebinar, and I'll introduce them into the conversation with Scott. By way of contacting Scott, all of the questions, comments, observations that you put into the chat room will get to Scott with your email attached. So it should be an easy way to get hold of him if you wish about points of detail, but if you want to ask a question as well, just slip it in there and I'll throw it into the conversation. Now, just to warm things up on a day where I'm steaming here in a room, I thought we would have a quick poll. Scott wanted to know what you thought. Investment theory would argue that restricting one's investment universe or the opportunity set reduces the chance of outperforming benchmarks. It's a subtle question, so poll up there. Do you agree? Or do you disagree, or are you really unsure? Now, Scott, I should probably point out that our audience is horrifically opinionated over here and very, very quick at voting. In fact, we've already hit 50% of the audience have voted. We'll leave it open just a little bit more. For those of you in the audience, do put in, there we go. And we'll just post those results and you can see them. So it's a pretty inclusive, restricting oneself reduces the chance of outperforming benchmarks. 73% on that, 18% saying no, and 9% unsure. So 3/4 of the audience agree. Scott, the floor is yours. Let's see what the right answer should be.
Well, thanks very much, Michael. That's a great result, actually, because now I can spend the next 20 minutes changing the minds of those 73% of the people. Greetings to everyone, and thanks very much for joining this presentation on the characteristics of Islamic investing. As Michael mentioned, my name is Scott Klimo, and I am the Chief Investment Officer at Saturna Capital. Saturna Capital was founded in 1989, and we're based, again, as Michael said, we're based here in Bellingham, Washington, just a few miles south of the Canadian border and the beautiful city of Vancouver. You know, the origination story of how Saturna came to be involved in Islamic finance is interesting, but it's beyond the scope of today's talk. So suffice to say that since our founding 33 years ago, Saturna has grown to be the largest manager of Islamic compliant equity investments in the United States, with roughly $6 billion under management. We also have an office in Kuala Lumpur, Malaysia, that manages money for a number of institutional accounts, including the Malaysian Employee Provident Fund. I think that our success has relied largely upon excellent investment performance, and we believe that a rigorous application of the principles of Islamic finance has contributed to that performance. We also believe that these principles can be advantageous for any investor whether religiously inclined or not. Next slide, please. When people think of Islamic investing, one of the first things that comes to mind is negative screening. Oh, you're just eliminating various types of companies. And it is true, there is an element of exclusion among products and activities. I'm sure you would all be aware of the haram or prohibited nature of alcohol, pork, gambling, etc. But in terms of the investment universe, these are small players and really not that relevant from a benchmark perspective. Looking at industries, the prohibition on conventional financial services, which encompasses banks as well as many types of insurance, is more important. But even there, you look at a lot of different indices, and often even finance has a small weighting. For example, in a growth index, I think in the Russell 1000 growth index, finance is something like 5%, maybe even less than that. It's pretty small. But what really does make a difference are the financial metrics, primarily the cap on acceptable debt. That can hit utilities, telecoms, and of course, capital-intensive industries such as automotive, and anybody who has significant capital investment requirements to manage their business. So if we look at those various metrics we have there, in our system, we take these financial metrics and assign an A through D letter score to the company depending on the combination of ratios. What is the debt figure versus the accounts receivable figure, etc. Those companies that are engaged in haram, again, prohibited activities, are automatically assigned an F. I know I just said A through D, but they're automatically assigned an F regardless of their financial metrics. So if you're a casino company or Diageo or Philip Morris, you're automatically assigned an F. To give you an impact, or excuse me, to give you an idea of the impact from a universe of 5,000 global stocks, which we pull in from Refinitiv, roughly 2,150 pass the Islamic screens and are rated A, meaning that they are available for us to invest in. So thinking back to our poll question, we are dealing with a constrained universe here. Now, a lot of people would say, going back to my initial comment with this screen, is that we're just using negative screens to eliminate high debt companies. Next slide, please. In fact, we consider it to be positive screening for financial characteristics we find attractive. Now, I know that a lot of people are probably just saying, oh, that's just semantics. You're just turning it around. But there really are a number of significant benefits to the types of companies we are positively seeking within the investment universe. A number of qualitative benefits, some of which I've listed here on this slide, many of which are important in times like today. They were important during the global financial crisis, and they're important in this sort of environment that we're going through today. Financial disruption is obviously a significant risk given everything that's going on in the world. But there are also quantitative benefits. A lot of companies have increased leverage over the past couple of years to increase dividends or buy back stock. And in an environment of low interest rates, that's fine. That carries minimal repercussions. But with today's rapidly rising rates, and who knows, maybe next week we're going to get anywhere from 75 to 100 basis points from the Federal Reserve, those companies will face larger interest bills. While at the same time, the Federal Reserve rate hikes could potentially bring on recessionary forces that could have a negative effect on businesses. And as a result of the combination of these two factors, we could find a number of companies in financial distress. Next slide, please. A strong balance sheet often goes together with good cash generation. If you generate cash, you don't need to borrow money. You can rely on internal sources of capital. That's something that's very important to us. Good cash generation, the ability to fund your business internally, can indicate good returns on invested capital, which in turn implies skilled capital allocation. These are all positive characteristics that we're seeking when we're going through our screening process. Apart from low debt, we seek a variety of additional positive attributes that we believe are likely to contribute to more attractive risk profiles and potentially higher risk-adjusted returns within our portfolios. You may notice some phrases in here that kind of resemble ESG speak, which is quite a big topic these days with greenwashing and various regulations. We are pre-ESG. Having managed Islamic portfolios for over 30 years, we date back to even before SRI, or socially responsible investing, in case you're not familiar with that abbreviation. We have always been concerned with management integrity, executive compensation, key performance indicators that align with shareholder interests, good employee relations, and the sustainability of the business. So in addition to the various financial metrics that we seek out, the positive financial metrics, we seek out these positive qualitative metrics. And we apply a very deep fundamental analysis into both of these areas, which I'll touch again upon later. So why are these things important to us? Why do we want this sustainability, this financial resilience, quality management? What is the importance of these things? Next slide, please. Well, it's because we're not these guys. I don't know if any of you watch CNBC, but twice a day they have these trader lineups for an hour each day. One of them is called Fast Money, although I kind of think it should be called Fast Money Going Out the Door. And truly, I think it's one of the most financially destructive things in the financial media. Anyway, the point is that we are not traders or speculators. It is contrary to our philosophy as investors, but as you may have already guessed, it is also contrary to Islamic guidelines. Next slide, please. While speculation is generally translated into Arabic as qarar, and if there are any native Arabic speakers out there, I sincerely apologize for my pronunciation. I tried to have some of my colleagues tell me a couple times, but it's kind of a tough word. In any event, the words have differences. And let's look at it this way. You know, we all speculate daily. If I wake up and I look out the window at gray clouds, I may speculate it's going to rain, especially living in the Pacific Northwest in a year that's been exceptionally wet. Although I know that those of you listening in the UK will not feel much sympathy for me today. But as I look at the clouds, maybe I'll ask myself, should I bring a coat? But unless you want to anthropomorphize the weather, there's no winner or loser in that transaction. It's just me staying dry or getting wet. The problem from an Islamic perspective is the type of speculation where one wins and another loses. And it's not really visible in the beginning. As you can see, those whose consequences are hidden. It's not visible. And that sort of situation can lead to injustice. Take, for example, maybe I sell you an out-of-the-money call option. Neither of us knows what will happen with the stock price, but obviously there's going to be a winner and a loser. Injustice. We try to avoid that. In Islamic finance, the idea has been extended to investment activities that resemble gambling. Derivatives are a clear example, as I just provided an example, but unprofitable company. Let's say you're investing in a startup biotech. It could turn out to be a tremendous investment. Look at Moderna or BioNTech. Fabulous investments at the start of the pandemic, but that doesn't remove the fact that it's still speculation. We do not do these things. We have an approach that focuses on long-term investment. Next slide, please. So thinking about or thinking back to some of the positive characteristics we seek, several are explained by our focus on this long-term investment rather than speculation. And when I say long-term investment, here I'm providing some information, some examples. So if you look at the turnover statistics from Morningstar for mutual fund management, it can leave one just gobsmacked. I mean, how can you have 63% or even 80% in the case of, 88% in the case of the Morningstar large blend category? How can you have that level of turnover and really call that investing? I mean, if I have 88% turnover, I basically have an entirely new portfolio every year. Now, I know we're talking about averages here rather than the median. Unfortunately, I haven't been able to find the median figure, but I'm sure that the averages are pulled up by some quant strategies with 400 positions, tracking factor exposures, rebalancing every month, things of that nature. But I believe the observation remains valid, especially in contrast to our approach. So comparing our turnover to the Morningstar median, you can see we're in a different category. 5% turnover. There are years when we have 0% turnover. So it's and you know, think about the 5%. That implies a 20-year holding period, and it can be even longer than that on occasion. So as a result of this, we don't have the constant pressure to get ideas through the pipeline, which provides us the luxury of time to do deep dives into the fundamentals of the industry, the competitive environment, capital allocation, as I discussed previously, returns, valuation, and of course, the acceptability of the investment from an Islamic perspective and its ESG/SRI credentials. We do not focus on whether a company is one standard deviation expensive versus its 10-year median, although we would find the opposite of that of interest if it's one standard deviation or more cheaper than its median. Rather, we focus on the operational aspect of the business and whether our expectation that it can grow earnings at a rate greater than the industry or the overall economy remains valid. I would say next slide here, and I would say let's look at an example, but my compliance department did not allow what I had planned to show as the next slide, which was going to be a chart of a particular stock that we own. However, I can still tell you about it. So many of you are likely familiar with the Danish-based diabetes specialist Novo Nordisk. The portfolio that I manage here in the United States has been invested in the company since I personally was in my 30s, and that was a long time ago. Over the 25 years that we have owned the stock, and when I say over the 25 years, I don't mean in and out and reducing and adding. I mean, we still own the same shares that we initially purchased 25 years ago. It's appreciated just shy of 6,000% in US dollars. Over the same period, the S&P 500 has appreciated about 425%. Now, there have been occasional periods of underperformance, and sometimes those have been extended, year, even 2 years. But we do not attempt to game that. We do not say, oh, it's a little expensive, I'm going to reduce my position or sell my position and get back into it cheaper. As I said, we do not look at those types of metrics. We look at the operational aspect of the companies. We know that diabetes is, unfortunately, a growth market. And we know that Novo Nordisk, along with Eli Lilly, has done an outstanding job of executing and pushing diabetes treatment forward such that the two dominate the market. We now also know that more recent innovations in diabetes treatment, GLP-1 inhibitors, have been shown to be quite effective in weight reduction, which is a first in medical history, actually. And if there's a condition rivaling diabetes for endemic status, and let's just put COVID to the side for a moment, it's obesity. So another tremendous growth market for both of these companies over the next who knows how long. As I mentioned, we've held Novo for 25 years, and I wouldn't be surprised if we're still holding it 25 years from now. And let me just toss out one more example of this type of approach. We have owned Apple since our growth fund was launched in 1994. And again, the original stock that we purchased is still there. And several years ago, we even got a poster signed by Tim Cook for having held the stock for a return of 100 times the initial investment. You may think after you've made 100 times your money, it's like, hey, I've done pretty well. Let's find something new. But as of today, it's about 200 times. So this just goes to show, focus on the operational aspect, maintaining long-term investments in these companies. Okay, now we're ready for the next slide. So here is the piece de resistance explaining the title of the webinar. So I have no idea, or excuse me, I have no doubt there are accounts for which the ARK Innovation ETF would be appropriate. but certainly not for everyone, and quite possibly not even for most. Investors often act irrationally, one reason that we believe in active management. Buying and selling at the worst times. How many investors bailed out of the ETF in March 2020, and how many bought in December of that same year? Now, I'm not claiming that Islamic portfolios are immune to volatility, but historically, they have demonstrated excellent downside protection and over the cycle, excellent performance. You know, our founder says that one of the best ways to make money is to avoid losing it. And our Islamic approach, as I've just mentioned, has shown to do that very, very well, which is really just a bottom-up aspect of the stock selection risk approach. By buying companies that are financially stable, that have solid management, that aren't engaged in risky activities such as gambling or tobacco or weapons, etc. And by focusing on these types of companies, we have shown really good downside capture over the decades. So wrapping up, actually want to skip one slide and then move on to the one after that, because the next slide just shows some numbers. You can look at that at your leisure later on. Wrapping up, we see a variety of advantages to our approach, and several of them are outlined on this slide. We believe that they have contributed to the track record of investment performance for over 30 years, and we believe they are every bit as relevant today. So with that, I would like to turn it back to Michael and would be happy to take any questions.
Scott, that was great, and to time and everything, really, really delightful. A nice canter through a very interesting area, and we've got quite a few questions. Just to kind of get cracking, and in fact, it's here on your last slide. Hugh Purser is saying many managers, investment managers, are constrained by the performance horizons of their investors, which have now often become quite short term. How are you trying to avoid that constraint?
That's a great question, and we have a really advantageous position because, as you might imagine, a large percentage, we calculate roughly 50% of our investors are Muslim, and so they also are known. They don't speculate. They understand what we talk about when we say your best approach is to invest for the long term, and so we find that our investors are quite resilient and sticky investors.
Okay. Just out of curiosity, we've had a few sessions in FS Club on Islamic finance, and I myself have personally been, quite drawn into it. In many ways, the way I've expressed it is that it's really just an outgrowing of the three Abrahamic religions, and that this is a bit of effectively the Bible. Well, the Old Testament is a sort of 600 BC operating systems manual for society. And a lot of the principles in there are actually Christian or Judaic for that matter as well. It's just that Islamic finance seems to have pulled it together. You haven't ever been tempted to convert, have you?
No, I haven't.
Well, but you do seem like a good proselytizer for it, which is great.
It's interesting you mentioned that, though, because one of our board members recently wrote a book in cooperation with a rabbi and a priest, and talking about how the lessons of those Abrahamic traditions can apply today and can benefit millennials in understanding the current environment. And they use the example of Moses and his leadership skills during the Exodus. So interesting you bring that up.
What's the name of the book? Because Peter can find it and stick it in the chat room.
Millennials are. I'll have to get back to you on that.
We'll put it up on the website afterwards. It sounds like a good thing to do. Right. Well, back to some of the questions here. Bob McDowell, I think you sort of answered this, but he's just questioning: do you invest in startups or other companies that are immature in growth terms?
No, we don't, because we have certain. This kind of goes back to the speculative element, but also the risk control issue. So a startup is most likely not going to be something that has earnings. So that would make it unprofitable, and that would make it speculative. And we also have a rule that we just kind of, it's our own. It's not anything that necessarily derives directly from Islamic guidelines. But we don't invest in companies until they've been listed for at least 3 years. And the genesis of that is that being a listed company is hard. A lot of things are challenging, especially as reporting requirements and regulatory burdens are becoming heavier. And we like to see that they're able to handle that. And also, you never know what kind of thing might be in the closet that isn't going to come out until after a company has been in the market. And you look at WeWork, thankfully the information about that came out prior to its listing, but sometimes it doesn't happen until afterwards. And we prefer to just avoid that risk.
Okay, well, it sounds very sensible. In fact, a lot of this reminds me, there's a very famous investment finance guy by the name of Terry Smith. I don't know if you've come across Terry, but he, one of his great quotes is, buy businesses that could be run by an idiot, because trust me, someday they will be. And a lot of what you're doing, I mean, the debt ratios, the fact it's been around a while, the fact it's revenue driven, these are all things that are proof to some degree against idiots, or copper bottoming your ARK, I guess, is to extend that metaphor.
That would be a potential trigger for exit of a position if we felt that that had happened with the management.
Now, another question from Bob. He's got three different ones here, so it'll be a bit quick. So the first one is, any Islamic portfolio thoughts on sectors such as space exploration?
Well, again, I mean, there's certainly nothing that would prevent us from doing so from a haram versus halal, or prohibited versus accepted perspective. But I'm not aware of any profitable space exploration companies at the current time. SpaceX, maybe, I mean, but it's not listed. It's certainly not something that we would eliminate from consideration. Big risk with explosions and the like, but there's also insurance. So yeah, we could potentially look at it. Nothing would prevent us from doing so.
And where do you stand on things like armaments and defense?
Totally against. And I know that this has been an issue within the ESG universe about, oh, well, look, now these arms are being sent to Ukraine to protect them against aggressive behavior. And I totally agree with that. But regardless, the weaponry is not acceptable in Islamic investing.
Well, your clairvoyant skills are coming through. We got a few ESG questions coming up, but and the third area for Bob is just any thoughts on biotechnology?
We love healthcare and biotechnology as long as a company is in the profitable stage and is developing products and growing their sales, demonstrating decent success at either R&D or competent M&A, because that really is the story in drug development these days. Hardly anyone can just do it themselves in R&D. There's always an M&A component, and so as long as they meet the other qualifications, we're absolutely interested, and we do have biotech investments.
Kong was wondering, sort of what's your tracking error against, say, some of the other portfolios that are exclusionary, say an ESG one?
So tracking error is something that we don't really focus on. I mean, I guess it's something I could potentially look at with regard to, say, the MSCI Islamic or the Dow Jones Islamic Index. Haven't done so to date. I will say that our fund's tracking error versus conventional benchmarks is pretty significant. Number one, because we don't really pay any attention to it, because we can't. Well, not just because we can't, but we're going to be absent a number of sectors, and we're going to have portfolios that, relative to a broad benchmark such as the S&P 500, may appear a little bit unbalanced. But it's not a key focus because it's really I guess a risk question. And as I mentioned, our downside capture has historically been very good. And if you look at our annualized standard deviation of returns, or just the volatility of our funds, it is significantly lower than broad benchmarks.
Okay. One of the interesting things was you were looking there at the exclusion, and if I got the numbers right, it was from a universe of 5,000, you're able to invest in 2,150. Was that correct?
Yes.
Yeah. And a lot of people have said actually that you can get about 90% of your diversification in a sector with about 20 stocks. So it's actually not statistically that much of a problem, is it? Is it?
No, that's kind of my point. The poll at the beginning is, and yeah, I mean, I've research I've done has shown more like 30, but we do run pretty concentrated portfolios. So, we have perhaps 30 to 40 stocks in a typical Islamic portfolio. And so out of 2150, sure, you still have a lot to choose from. But I guess the point, and if I may, let me just provide a little bit of data in response to that poll question is, we have as I mentioned, we rank all the companies A, B, C, D, F, and we maintain historical records of that, so we can go back and find out all the companies that were rated A and the other letters at any time. And so yesterday, I just asked one of our quantitative analysts to update how those various letter grades have performed. And if we look at the performance of our A-rated stocks over the last 3 years, they're up 35%, while the S&P 500 is up 27%. And if we look at it over the last 5 years, the A-rated stocks are up 68%, while the S&P is up 55%. So we believe we actually are increasing our opportunity to succeed through the approach that we're applying.
Okay. Well, Charlotte Dover Ashley has a question about, does Scott think Islamic investing principles can be applied to ESG frameworks for investors today?
Absolutely. And the Islamic equity portfolios that we manage in the United States do have an ESG mandate, and we applied that in 2017. We realized that it wasn't a revolution. It was barely an evolution. It was just a little bit of tweaking, because, as I said, we have been focused on the S&G ever since our founding in 1989. So we had to make a little bit of an adjustment with regard to energy, and we decided to make the funds fossil fuel free. So we've been managing them in that fashion for the last 7 years, and the performance has been excellent, and we've been very happy with it.
Now, the Islamic finance area is an evolving space, and I've got a few questions almost about it, and I'll sort of start past, present, and future. You mentioned your colleague's book, but Hugh Purser was just interesting. Do you know roughly when the rules of Islamic finance, as stated today, were actually formulated?
Well, I guess the first thing I would say is it's not like GAAP. There aren't generally accepted Islamic principles that kind of everybody adheres to. There are differences. And so every Islamic fund will have a Sharia advisor, and they may have different interpretations of things. In Malaysia, for example, if you have, the Malaysian government puts out a list of companies that are approved and are not approved as being compliant. And if you have a stock in the portfolio that all of a sudden is no longer compliant, you're required to sell that position, unless it's underwater. You're allowed to keep it to get back to your original investment if you're losing money out of it at the time. But that's something that really contributes to, we don't really think that's a good way to manage portfolios. And so we will only invest in something that's an A rate at the time. But if it temporarily moves into a B, say the stock goes down, but the debt is stable, so now it has more than 33%, doesn't mean that we have to sell it. We can hang on to it as long as we believe that this is a temporary phenomenon that will eventually be righted. And so, the answer is that there are a lot of different interpretations. Much of it is esoteric and really nuanced. But I'm not aware of a stated set of investment rules. And really, it's something that's only developed over the past, I guess, couple of decades as the equity investing has become more relevant for a lot of the world.
Yeah, it's interesting because these things do come to points where, let me call it, informal adjudication becomes required. I tumbled across this when we were looking about 10 years ago at Murabaha finance, which is effectively lending with an agreed markup rate so that what could be seen as a loan is not a loan.
Right.
Now, in many cases, it's absolutely legitimate, but there was a lot going on in the markets where the major investment banks were entering into transactions with Islamic banks involving large amounts of metal, typically metal with a high energy content like copper or aluminium that tracked GDP, and then offering them what was effectively a forward discount rate on that, so that it wasn't a loan. But why two banks had any need for aluminium was beyond me, but the scholars approved it.
Right.
And that showed you that if you put a scholar in a 5-star hotel for a week or so, sometimes he changes his mind. So that was kind of one bit. And yet there are very legitimate things going on out there. But unlike, say, the Catholic Church, where there's a hierarchy, and I guess ultimately if there was Catholic finance, you'd go up to the Pope for an opinion. There are many, many different schools of Islamic thought. Is that not correct?
Well, that's absolutely correct. I mean, everybody knows there's Sunni and Shia, and that's one of the largest difference between two different approaches. But it's it's not. Sure, we have Catholics, we have Protestants, we have Episcopalians, etc., and there's an element of that to Islam, and so there can be varying interpretations. But I think the key point is that really it boils down to a very, very similar system. You're avoiding speculation, you're investing for the long term, you're avoiding usury, traditional financial activities, you're avoiding haram activities. One of the ways that we look at it is you invest in activities that are beneficial to human well-being, and you avoid those things that are not. And so, yeah, there are some rules that are tweaked around the edges on that, but it's really pretty similar.
Do you ever need to seek religious advice? Let me call it that. But I think either somebody's saying you're like something's borderline. You say, "Can you have a look at this? What do you think?" Or do you think our portfolio is okay? Or are your rules so long-standing? It's kind of, well, it's obvious.
It's mostly obvious, but things do come up. So, say for example, Microsoft, they have the Xbox for a long time, and the Xbox is used to play a lot of games that would not be acceptable. But that's not really Microsoft's core business. And so from our perspective, that's okay. It's a tangential activity. You may remember from one of the slides, the less than 5% of haram revenues. It's much less than 5% of Microsoft's revenues. But now they're looking to buy Activision. So that's something that we probably will consult with someone as to what they think about Microsoft going forward if that acquisition does go forward.
Well, that'll mean a 100-mile trip from Bellingham down to Redmond to see what's happening. Yeah. Out of curiosity, so we've got kind of the past. It's been evolving. We've got the present, which is different schools, but broadly discernible. Are there any sort of discussions about the future of Islamic finance in an intellectual framework sense?
I think it's less focused on that than on other ways that Islamic finance can be expanded and applied to the modern economy. And so we're seeing that particularly, I would say that that's perhaps more active in the area of what we would consider fixed income, even though fixed income is not permissible. There is a type of instrument, and you kind of described a little bit about how it may work with the metals, but there's an instrument called Sukuk, which is Islamic compliant fixed income. And the key issue there is that there has to be a particular asset and income stream that backs the issue of that, for lack of a better word, debt or stroke Sukuk. And that's an area where we're seeing a lot of interest in that finance, because there's a tremendous demand for the product amongst Islamic investors, and there's an insufficient supply. So we're seeing a lot of expansion, particularly within the GCC, the Gulf Cooperation Council, and so that's an area that's developing quite rapidly.
Okay. Well, I'm just conscious that I think it was in 2015, Pope Francis brought out the papal encyclical Laudato Si, which said that we have a responsibility to the environment. I could see Islamic scholars starting to put that on, and you might get to almost get to ESG through the Islamic route rather than layering on some Western ESG things.
Yeah, there's certainly no, I don't believe there's any contradiction. I mean, obviously you've got the fossil fuel issue with the Middle East, but that aside, I don't see any philosophical contradiction between the two at all. And as I said, it was a very easy step for us to take to apply that mandate.
You mentioned the Middle East, but in the green room, so to speak, you were also talking about Malaysia, were you not?
Yes, we have an office in Kuala Lumpur, and Malaysia is actually working quite hard to develop their Islamic finance.
Super. Yeah, in fact, one of the things we saw was Labuan there really focused on sustainable development goals. And in fact, at the beginning of the year, we brought out a paper with them on that, which is interesting. Just to, if we opened with portfolio diversification, and I'd like to maybe close on that. So, I look at my portfolio and I want a bit of fixed income, and then I go over to ARK and I give them sort of 60% of my portfolio and all, but I want to have 10% in alternative assets. What would Islamic finance say about cryptocurrencies?
Those would not be permissible, because it gets back to the definition of the harar on my earlier slide about that which cannot be observed. And I don't know how one observes the value of Bitcoin or Ethereum. So that is something we have had discussions about, and our current position is not something that we are going to become involved in.
Yeah, I think I'd come at it another way as well, which is that these are effectively gambling tokens. There's no underlying thing other than betting on the direction, and therefore you wouldn't invest in a gambling firm under Islamic finance, and nor would you, I suspect, be able to invest in a firm even that manufactured the chips for the gambling if that was a majority of their business. So yes, I could see that. Just to sort of close on all of this, I've really enjoyed this because you've got such a refreshing, open approach to the whole thing. You've seen an area like we're doing the job here. It makes a tremendous amount of sense, and so many of the rules here are rules that people in finance ought to know anyway. Know your counterparty. It should be in both people's mutual interest. It should be an underlying transaction of substance and reality to it, and you shouldn't be doing bad things. I mean, it's good stuff. I really do love it. Where do you see yourselves going over the next sort of 5 years in this space? Growing, booming, or is it just sort of a niche area?
Well, we're certainly hoping to grow. I mentioned earlier that we estimate that roughly 50% of our investors here in the United States are Muslim, and that means 50% aren't. So 50% of our investors are people who are not into it for the religious aspect. They're into it for the long-term performance, the lower volatility, the superior risk-adjusted returns, and I'm sure that the absence of sin stocks is attractive to a large portion of the non-Muslim population as well. So we really do want to develop that, because there is a cap. I mean, in the United States, the Muslim population is fairly large, and it's also typically very successful socioeconomically. And so we do want to be able to get into other populations. But again, we also want to expand into other areas of the world. So we have an ETF that's available in the UK. That's a global global Sharia-compliant portfolio that also has an ESG mandate as well. And so we're looking to take advantage, and of course we have the office in Malaysia where we manage a number of institutional accounts. So we are looking for multiple avenues to expand the business, and we would certainly hope to continue to grow it, and we would certainly hope to be able to teach more and more people about the benefits of this approach to investment and how it can help them meet their own financial goals.
Well, that's a great way to sum up. I mean, I quoted Terry Smith earlier, who is full of his aphorisms and rules, but he had two that you really opened up with, and one of them is don't over diversify, which a lot of people don't quite understand, and deal as infrequently as possible. In other words, stick to the long term. And you seem to exemplify a wonderful set of rules that any investor ought to follow, but these ones are also religiously compliant. So thank you so much for that. I have 3 quick rounds of thanks to give. My first is to our sponsors, many of whom are operating in Islamic areas or have Islamic finance units or Islamic finance centers. So I hope that this is some message that looks at melding West and Islam together. Secondly, I'd like to thank the audience. It's been a bit of a small audience today, but very engaged with virtually nobody leaving. So obviously you've enjoyed it, and I appreciate that. All of your questions, comments, and observations will be sent, as I said, with your email to Scott. But finally, Scott, to you. Now, I didn't know how to end today because we just don't quite have the technology for applause. But I did, in fact, from a Buddhist temple, I found my Korean karmic clapper, which is the applause you would have got if some of these online systems were a little bit better at it. It's been a joy having you here, and we wish you a really wonderful and cool day over there in Washington State.
Well, thank you very much, Michael. It's been a pleasure, and I appreciate the opportunity.